let me ask you a slightly different question about crypto. We were talking earlier also about Bitcoin, and it's going, it's rising. There's talk in Washington also about creating a Bitcoin reserve, actually. You do deal with currencies to some degree, and you have to think about some of these issues. How does crypto sit with you right now at a time when it appears that this next administration may legalize it in a much more broader way? I mean, it's legal now, but there might be a much bigger groundswell for it.
So from the jobs that we have, what's relevant is really two things. One is just, what role should crypto assets be allowed to play in the banking system? We try to keep the banking system safe and sound. We regulate and supervise banks, and we would want the interaction between the crypto business and the banks not to threaten the health and well-being of the banks. That's thing one. The other one just is, to the extent anybody's doing that through a bank, we would want the public to, if people are buying crypto products and things like that, there's sort of a consumer protection aspect of it. But they should need to understand exactly what it is and that sort of thing. But we're not, we don't regulate it directly, and we don't have that big of a role.
Would you ever own it yourself?
I'm not allowed to.
You're not allowed to?
No. I don't think that's how people think about it. I mean, it's so, people use Bitcoin as a speculative asset, right? It's like gold. It's just like gold, only it's virtual. It's digital. People are not using it as a form of payment or as a store of value. It's highly volatile. It's not a competitor for the dollar. It's really a competitor for gold. That's really how I think of it.
Probably know who has a sense that your job, he says, it's the greatest job in government. You show up to the office once a month and you say, let's flip a coin, and everybody talks about you like you're a god.
Yeah.
That is President-elect Trump.
I know, yeah. So he's right. The part about it being the greatest job, it might well be right. I have to say, as I mentioned, I do love the work, and it's a special place to be surrounded by people who are so dedicated, and to know that your work really matters for people. It's a very special honor to do that work.
Did you laugh when you heard that?
I thought he's partly right there, but he's not right about the come to work, once every month.
Just the flipping of the coin part?
Yeah, that part it's not like that. Not like
the president-elect has been quite outspoken about it, just publicly, about the idea that maybe the Federal Reserve should come under more control and have the White House should have more influence over it. What do you think when you hear that?
Well, I think that what is the case for the Fed being independent? What does independent mean? It basically means that we can make our decisions without them being reversed, other than by Congress, which created it. We're a creature of Congress. We're not in the Constitution. We're a creature of statute. So that's what independent means. And that gives us the ability to make these decisions for the benefit of all Americans at all times, not for any particular political party or political outcome. We're supposed to achieve maximum employment and price stability for the benefit of all Americans and keep it out of politics completely. I think there is very, very broad support for that set of ideas in Congress, in both political parties, on both sides of the hill, and that's what really matters. It's the law of the land, and I'm not concerned that there's some risk that we would lose our statutory independence, because I do think that those set of ideas are strongly believed by people. And
but do you fear? I mean, he has talked openly about firing you, which is something technically he's not supposed to be able to do.
So I never discuss anything that elected officials say, so I'm going to disappoint you here. I just know, this is our focus. The U.S. economy is in very good shape right now. It's in remarkably good shape. We are the sort of envy of other large economies around the world, and I want to do everything I can to keep it there during the rest of my term, and I feel very good about where the economy is and where monetary policy is.
We're going to go there, and likely to be, if it gets confirmed. Scott Bessent, who I think you know, has made this is what he told Barron's. He said it publicly. He said, quote, and this is an effort to undermine your power. He said, you could do the earliest Fed nomination and create a shadow Fed chair. And based on the concept of forward guidance, effectively the idea of what people expect in the future, no one is really going to care what Jerome Powell has to say anymore. What do you think the impact of something like that would be? Do you believe that that's even a possibility in the world?
So let me say, I don't think that's on the table at all. There's a set of institutional relationships between the Fed and every administration. I fully expect that we'll have the same general kinds of relationships that we have, institutional relationships, for example, with the Council of Economic Advisors, but most importantly with the Treasury Department. The Treasury Secretary and the Fed Chair have had breakfast or lunch together every week for 75 years. And not more than that, the institutions have to, there's got to be trust and mutual respect and acknowledgement of the different authorities and boundaries that we have, but a very constructive relationship because, in times of crisis, we work much more together under the law. Nonetheless, it's a very important relationship, and I'm confident that we'll have the same kinds of relationships with the incoming administration.
That first lunch, though, is going to be interesting.
It's going to be fine.
Have you guys talked?
I don't know him. I don't know him well, but I am confident that I will have the same kind of relationship with him once he's confirmed, as I've had with other Treasury Secretaries. But let's take tariffs. Here's what we don't know about tariffs. We don't know how big they'll be. We don't know their timing and their duration. We don't know what goods will be tariffed. We don't know what countries' goods will be tariffed. We don't know how that will play into prices. What will be the transmission into prices? We don't know how people in the markets and in the economy will react to that. And we don't know whether other countries will retaliate. So that's the list of things that we don't know. It's a partial list of the things we don't know. So we can't really start making policy on that at this time. That is something that lies well into the future. We have to let this play out. We literally don't know all those things. The main thing we don't know is all the other things that will be happening in the economy in 6 months or a year when this starts to matter. So what are we doing? We're modeling this. We're looking at it. We're evaluating it. We're observing. But it's right. The decisions we're making right now are not about that. They're about what's happening in the economy now.
Similar answer in terms of immigration. And the reason I ask about immigration is, the CBO has calculated that if there's one force in the economy today that could be a major boost or not to the GDP, jobs, tax revenue, lowering the deficit, all of it, seems to be about higher net immigration.
So let me say, for both trade and immigration, the Fed has no role in that policy. We don't have an institutional view on the right level of tariffs or the right level of immigration. It's just not our job. That's the job of elected people, and we don't comment on the decisions they make for whatever reasons they deem appropriate. We don't comment on that. But I can tell you, there was a great deal of significant wave of immigration. It's now the level of immigration has come way down in the second half of this year as the Biden administration changed its policies. It's true that a lot of people came in and they went to work, and that was part of why the GDP growth was so high in 2023 was a wave of people coming in and doing more work and spending money.
I know the dollar is the Treasury's department, so I'm not going to ask you about the dollar per se, but I am curious, just because it relates to tariffs, there has been this sort of speculation around tariffing countries, BRIC countries, that may be trying to build their own currency. And long term, if you're just to think out a long time, the idea of the U.S. as a reserve currency relative to somebody else creating their own, is it something that concerns you?
You started with this. The administration, and more particularly the Treasury Department, has responsibility for the value of the dollar and for exchange. It's not something that we opine on. We stay away from that, and they stay away from what we do.
And here we are in 2024. And we haven't tipped over yet. And in between that, there was this whole MMT idea that somehow we could just spend money wildly and that would be fine too. And I'm not sure that's gained too much traction either. Maybe it's been undone. But what do you worry about as the tipping point for all of this?
So you're right. I did work on fiscal policy issues before I came to the Fed. But at the Fed, we don't have oversight over fiscal policy. Quite to the contrary. Congress has oversight over us. So I would limit myself to saying this, that the U.S. federal budget is on an unsustainable path. The debt is not at an unsustainable level, but the path is unsustainable. And we know that we have to change that. We've got to get back so that revenues and spending are in better alignment. We don't need to pay the debt debt down. We don't need to balance the budget. We just need the economy to grow faster than the debt, and that's not happening. We're running very large budget deficits at a time of full employment and strong growth. So we need to address that, and we got to do it sooner or later, and sooner is better than later. I worked on a project with Nick Brady in Washington. We became friends and colleagues. He becomes Secretary of the Treasury, eventually invites me to go to Washington as an assistant secretary, and honest to God, the point of the story is that little bit of initiative to force myself to get up and, very fearfully knock on his door thinking he might take it the wrong way. Maybe I wanted to leave the firm or something. And that little bit of initiative, without that, I would not be sitting here. There's no way I'd be sitting here. That is what opened the door to me to do public service at a high level that I hadn't really earned or deserved. So
did you ever think, you don't have a PhD?
No.
So did you ever think that you wanted to go to the Fed?
So when I worked at Treasury for 3 years, and I really liked the people at the Fed, people like Don Cohn and Alan Greenspan and many others. I liked it, but I never thought that's where I would wind up. I thought I'd love to come back and serve again in some kind of economic capacity, but I never thought I would be at the Fed. So then what happened was I did a study of the debt ceiling during the 2010 debt ceiling crisis, and I briefed really the Republican House and Senate caucuses and convinced them that they had to raise the debt ceiling, that it wasn't a fake thing, that there really would be a default. And the Obama administration was extremely grateful to me for doing that and nominated me to the Fed. And I've loved it.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have Jerome Powell in the house. Sticking with the same theme, the U.S. economy is doing great. And he says Bitcoin is like gold, not a competitor to the dollar. But we know the Fed printed 80% of all money in existence in 2 years. They the ones who destroy the dollar. And remember, the Crypto Teacher told you. And we have Trump and the new Treasury. And the Treasury Secretary asked for a shadow chair for 2026. So no one will listen to Jerome Powell. And like I told you, 2025, they're going to step these movies up. We have Trump, tariffs, and of course immigration. And Jerome Powell said immigration went down and that helped the GDP growth. Immigrant workers working and spending that money in the economy. And I think, guys, that was by design. We know when it comes to the NWO, it's all planned out. And we're going to start seeing a lot of this affordable housing. And instead of the immigrants just building, you're going to have the machines, the 3D printers. And remember, the Crypto Teacher told you. And he says that the debt path is unsustainable. And we clearly know that. These are economists telling us what we already know. $36 trillion and counting. And with interest rates this high, we're paying over $1 trillion just to maintain the debt. And is the Fed going to be cutting rates in December? And we'll know this on Friday. Of course, we got the ADP numbers. They were decent. They weren't bad. They were decent. But the narrative is that they were low. But we'll see the narrative on Friday on whether the Fed cuts. Of course, right now, the Fed funds rate is probably at 4.5%. They want to get down to 4. That's their neutral rate. If they do cut, we know we're going to have a year-end rally. But then I definitely see them pausing at the beginning of the month. And we have Bitcoin and crypto pumping right now like clockwork. But guys, we know we have options on Friday. So yes, we finally hit that 100,000. We have Ethereum at 3,800. And we'll have a lot more room to run if the Fed cuts. And remember, the Crypto Teacher told you. Because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
The expectation is that you're going to cut rates. But I'm curious about why that is the expectation, insofar as we're still in a moment where it appears that inflation looks a little stickier than we thought it did. And the economy is stronger in many ways than had been expected. And so the question is, what is the cost, if you will, of waiting?
Right. So let me take a step back on that and just say the background is that, as I mentioned, the U.S. economy is doing very well. We're in a very good place with the economy. We're growing at around 2.5%, and inflation has come down. Headline inflation was as high as 7.2 or so. Now it's at 2.3%, and unemployment's at 4.1%, which is a little higher than it was a couple of years ago, but it's still it's a very, very low level. And, we're not quite there on inflation, but we're still making progress. So the backstory is that the U.S. economy is in very good shape, and there's no reason for that not to continue. So we raised rates to between 5.25% and 5.5%, and we held them there for 14 months. And other central banks around the world had already started cutting. We were the last major central bank to cut. And we're now on a path to bring rates back down to a more neutral level over time. But you're right, the economy is strong, and it's stronger than we thought it was going to be in September. So the labor market is better, and the downside risks appear to be less in the labor market. Growth is definitely stronger than we thought, and inflation is coming in a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral.
Tell me, I'm actually very curious about this, just how you think about it. Occasionally when you either get it wrong or it's not where you think it was going to go. As you said, you had a different view in September than you do now. Obviously, things change. But what was it in September that surprised you? And if you could go back in time, do you think that you would have known the difference?
Well, in September, what we saw was the unemployment rate had moved up close to a full percentage point. And again, we'd held on long after other major central banks had cut. And I mean, more broadly, there are two risks, right? There's the risk that we move too quickly and undermine the progress we've made on inflation, and there's the risk that we move too slowly and unnecessarily undermine the labor market. And we're trying to be in that middle place and get it just right so that we continue to get inflation coming down. We keep policy at a restrictive level, but at a less restrictive level over time. That's what we're trying to do. I would say in September, it was time for us to cut because it was time, but also because I wanted to send, and we wanted to send a strong signal that we were going to support the labor market if it continued to weaken. What happened instead was, in the couple of months after that, we got some data revisions which strongly suggested that the economy is even stronger than we thought. So the picture is actually stronger than it was then.
How do you think we, as the public, should think about when we get these labor numbers, which, by the way, seem to get revised all the time? Do we have a counting problem? And I ask it really because oftentimes we'll see a number and then you'll find out, a month later that not only was their new number, but actually the old number was off by more than you could expect. Do you think there's a better way?
So the way it works is that the numbers that people see from the household survey is the unemployment rate, and then the payroll jobs, that's an economic establishment survey. They're surveys, so you're not counting people nationwide. You're doing as sophisticated as you can survey, and you're projecting that out to the nation. What's happened lately is that survey response levels have come down, and that has it's meant for smaller groups of people, and that means there's more volatility. There's been more volatility in the revision. So you've seen a lot of months in which a job number comes in and then it gets revised down the next month, and that's typical when the unemployment rate is going up. The labor market data is among the best data that we get. We do eventually, the Fed doesn't do this kind of data, but it eventually gets down to counting people and tax records and things like that. But the first numbers that you see are survey based, and they're going to be a little volatile. Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance, agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're going to get more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, if new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.